Hey everybody, what's up? Doing another portfolio update today. So overall, not too many changes in the actual portfolio. Saw another week of fairly decent dividends. However, we did see an overall slight decrease of 1% after the pretty solid increase last week. But overall, I think with the market the way it is, I think it's looking fairly solid for these going forward, especially as I continue to reinvest. We're now at almost 56 total shares. So I think the reinvestments will eventually catch up to the actual loss in equity fairly soon. But honestly, I don't know how much longer I'm going to do this for because just based on how it's been going, I think with the asset value decay that I'm seeing, it's not entirely worth it. Obviously, big dividends are cool every week, but in the long run, there's not too much point to it unless you're actually seeing an appreciation in total equity alongside it with reinvestments, which so far I have not. But got pretty close this week. I obviously, with the whole market being down a couple days ago, it's probably a little bit lower now. But we'll just have to see what happens with that. So anyway, moving back to the overall portfolio, let's go here. So not too many changes, I don't think. One thing I will say is that I doubled my position in Supermicro after the whole semi sector kind of mini crash that happened a couple of days ago. I doubled my position there. I had not that much in the stock, and honestly, I've been wanting to put more into it for a while, and this was just a great buying opportunity. So, also sneak peek ASML video coming up next, but let's go into SMCI and I'll kind of show what I saw. So, pretty large drop of 12% on the 27th, so 2 days ago, followed by another drop and actually a slight decrease today as well. So, just with the value being right around this range where we saw that kind of, in my opinion, very large amount of oversold selling happening with the company, I think this is a great time to get in right around this price range. I think the value of the company will be increasing in the future just based on its sales growth and everything. And really just the overall value that it's been gaining during this time where the stock price has been decreasing. So anyway, moving on. Other than that, I don't think there were any changes in anything. I don't think so. So other than that, I think that's the only change I made in the past week or so. So anyway, I also did a little experiment with some valuations. Now, unfortunately, because the market is closed, some of these are not updating, or at least they tried to update and just went away. But anyway, I did a little bit of an experiment on a couple of valuations. This is basically just taking their own price to earnings per share ratio or price to earnings ratio and comparing it to their sector average as well as the median of their sector. I basically just did an average of those two values. Um, and then what I did was I multiplied it by their own current EPS. So it's basically just the average valuation of their sector multiplied by their current EPS to get valuations. So a couple companies I was a little surprised with, like Celsius, despite falling so much, compared to the earnings price to earnings ratios of their sector is 20%. They should be at roughly $20 a share. Now, again, this isn't really like a definitive thing. Like, obviously, most companies in most sectors are very different. This is just kind of a general thing for companies that are similar to them. So, seeing a 17% upside for Chewy, Dollar General, I honestly was probably the least surprised with. Their stock price has fallen so much that there is a massive amount of upside. Not really surprised there. A little bit with Lululemon, although to be fair, their stock price, if we go into that quickly as well, has been having a fairly large rebound recently. But even still, I do think that they can go a lot higher. All-time high was at 500. We're at 400 right now. And that is actually right where the valuation is putting it as well. Robinhood is seeing a fairly large downside currently. However, one thing to note is that a lot of their current price comes from anticipation of future revenue, where they're having massive expansions with options. They just added index options, huge expansions into cryptocurrency, which is bringing in a ton of revenue. Um, so that's kind of where their seemingly inflated price is coming from. And another thing to note is that this valuation here is significantly higher than what their price was kind of stuck at for a very long time. So they were stuck in the basically 8 to 14-ish dollar range for basically 2 years. And now the valuation here is saying $20, which is just about doubled from there. And I'd imagine once their revenue, which they are projected to have massive revenue, once that revenue is kind of caught up to where they're expecting to be, for example, their next earnings report is at 915 million for the estimate, and that is just from one quarter, compared to the previous one at 660 million. Increases like that will massively increase the valuation just based on this kind of formula for valuations, which again, there's many different ways to do it, but overall looks pretty solid. So earlier today, when the PayPal was actually working, it put it right around, I think, $96, which again is also expected. PayPal saw a fairly similar drop to Robinhood, actually, where they were up very high and came crashing down, just with a sort of series of bad news and underperformance. But now they're in a fairly solid rebound. So that valuation was put right around $96, I believe, earlier. It seems like it works a lot better when the market opens or when the market is open. But again, I don't really use Excel because personal computer, I got to pay for it, and I'm not doing that. Anyway, moving on. Snapchat's valuation came in at negative something. Basically, when the EPS is negative, it doesn't really work very well. That's just the thing I also want to highlight. So, for example, the Google Finance function for this gave CRNC an EPS of negative 14, which is not the most accurate. However, smaller companies like this, which it does say if you look up information about this function, smaller companies, like many of the companies that I own, such as these three, kind of have information that is a little bit less reliable. So I'm not going to focus on them too much, which is why I kind of skip past CRNC there. But another one, Crocs, compared to its sector, is apparently having an upside of 265%, which if we go to the stock chart here, we can see that their all-time high was right around 180, and I am showing a value of 382. Now, just another thing to be fair with, the sector that they are in is very, very diverse. There's a lot of different things. So it could be just a little bit of a skewed result from companies in their sector. But overall, there's definitely a lot of upside to Crocs. And I think a lot of people know about that, but still. Moving on, SMCI, HIMS, and New Holdings all came in with fairly significant downsides. Now, again, with these sectors, there is a lot of diversity. For example, HIMS is mainly online retailing. However, they are put into a healthcare sector. So their valuations and their price to EPS multiples are vastly different than healthcare companies that could be very, very different from them. New Holdings, kind of the same story. A little bit of the same thing with SMCI, but also I feel like SMCI is mostly there for the potential growth, which we have been seeing from the company for a while, which I'm not going to click off of that yet because I do want to do the ASML video right after this. But SMCI saw a massive fall, and a lot of this growth here was mostly just from semiconductor and AI hype. And now that they've kind of returned to this, this area is a fairly heavy support right around the $23 to $30 range. So now that they're kind of in that area again, I feel like they're mostly going to be focused on growth. And you could see their earnings are very, very solid. I mean, 5.7 billion in revenue is really, really good. And if you compare that to their valuation, which I'm going to go off of it anyway, I believe their current valuation is like 16 billion. So they're making a third of their market cap just about in revenue every quarter. That's kind of crazy. So I'm expecting that to be a lot higher, basically. So overall, a lot of different things. One surprise was GMM came in at 800% higher than its current valuation, which kind of crazy, but also competitors are a little weird there. If you do look up the company, it's mostly just a bunch of small Chinese software companies that a lot of people don't know anything about. I don't know anything about, but GMM, I think, just based on the growth that they've been seeing, um, it's not insane to think about. Plus, by the way, their current market cap is like 10 million, which is why if I go into my portfolio here and we look at GMM and PSHG, I have a total of $130 in both combined. That is because their market caps are incredibly low. It's incredibly risky to own both of them, but I just think there's a decent amount of potential there. So that little starter position, if they reach $1 billion one day, is going to be pretty large. So that's just something. But anyway, just a little bit of an experiment with valuations. I think that's all I wanted to go into today. I'll probably make an update video in a little bit, once maybe tomorrow when the market's open, just to show the other valuations that weren't loading for whatever reason. But anyway, that's all I have. Portfolio is sitting at 6.1% up year to date, which I'm pretty happy with. And that's it. So thanks for watching. Make sure to subscribe if you haven't, and I will see everybody in the next video.